Thank you very much. Hello, everyone. Thank you to Marine Money for inviting me to speak here today. So I'm going to be covering a wide-ranging topic, moving the marine economy, the energy transition and shipping. So I'm a director at MSI, and I cover primarily oil markets and the tanker sector. The agenda for this will be looking a little bit at what's going on currently, but really the focus is going to be long-term dynamics in terms of how the energy transition is likely to develop and how that then impacts marine markets. So section 3 will be looking at cargo trends and also new markets. And we'll cover quickly fuel and propulsion as well. So we've got lots to go through. So far 2020 has been a decade of disruption. Number one, we had the COVID-19 pandemic, as we all know. We can see this chart showing GDP growth and oil demand growth over a long span of history. And we can see the massive disruption caused by that pandemic, both to the global economy, as we've all experienced, and to oil demand. We also saw that impact on other sectors, such as across all shipping markets, but we're still seeing the ramifications, even though we've recovered in terms of the economic position, the oil market, the ordering that we saw, driven by differing drivers for different markets, for example, for container ships, which prospered during that period, is still impacting on shipping sector today in terms of new build orders, and we heard earlier in terms of yard congestion as well. So there's still an influence from that disruption. Then, soon after, we had the invasion of Ukraine, and another quick succession of disruptive drivers. So these charts are showing you changes to Russian oil flows, both crude oil and clean products, following that in February 2022. So we can see massive disruption. Russia accounts for over 10% of global oil production, so we're looking at a large proportion of the market changing direction, driving ton-mile demand in particular for the tanker sector. This also impacted the dry bulk markets as well. You didn't have much time to take a breather though, because last year we had the third major event really in terms of shipping disruption of this decade so far. As again, I'm sure everyone is aware in terms of the crisis in the Red Sea and Suez Canal. So these maps are just illustrating some of the changes to trade patterns as a consequence of that event. We can see on the left side container ship movements. The yellow is showing, in this case, December 2023, and the blue is showing you, the yellow is showing you September, and the blue is showing you December for container trade patterns. So that rerouting around the Cape, significant for that market. Similarly, on the right-hand side, you can see the tanker sector as well. So we're seeing that rerouting happening. This is showing you January this year versus December. MSI now covering a lot more in terms of AIS movements analysis. So if you want to look at how the fleet is moving, be it your fleet, your competitor's fleet, or globally, we can assist with that. So that's the current situation. I'm not going to focus on that in this presentation. I'm going to give a more long-term outlook and look at the energy transition, this kind of catch-all phrase for changes to energy, its demand and its supply, and how that will impact the shipping markets. Be warned, these are going to be some quite long-term forecasts out to 2050, but these are going to change different sectors in different ways. Shipping has a very varied exposure to the energy sector, and this schematic is just illustrating how different shipping sectors are exposed to energy. So towards the right side, you can see the oil tanker market, LNG, offshore, highly exposed to energy. I'm not saying this in a positive or negative way, but this is their position. We move to the left, you can see that markets such as container ships, the largest, or one of the major markets in shipping, of course, has limited exposure to the energy transition. I say we're going to look to, yeah, we have got that on there. Yeah, so we have forecasts here to 2050. So we're talking long term here, but to quote from Ernest Hemingway's novel *The Sun Also Rises* on the subject of bankruptcy, which I'm not saying is going to happen to anyone anytime soon because of this, but someone asked, how did you go bankrupt? And the response is two ways: gradually, then suddenly. So this is going to be a gradual change, but it is going to have a major impact on shipping markets. This is our projection for final energy consumption of different types of fuel. So we can see the growth, first of all, historically, the spread between hydrocarbons. Those comprise the kind of bottom layers of that, the dark blue, yellow, and green, and other sources, and also the light blue, and electricity. So this is end use of energy. What we can see here is, first of all, we expect overall growth to slow down in terms of energy consumption, driven by both efficiency improvements, demographic and economic changes as well. We also expect to see that electricity component increasing significantly across the forecast, and that obviously has ramifications for shipping involved in large part in the movement of hydrocarbons. But we can also see those hydrocarbons remain significant across the course of the forecast. They aren't going away, but they are expected to decline in terms of long-term consumption. So when we look at electricity use, on the left side here you can see final consumption of electricity use by sector. What's going to drive the growth? Well, we expect a range of sectors to do this across residential, industrial, and so forth. But the real delta here is coming from transportation. And again, I'm sure everyone's aware in terms of vehicle electrification, how that's evolving. And that will continue to evolve in different ways in different regions. We're certainly seeing different regions' uptake of electric vehicles change. China's really driving the market in terms of EV sales. Those grew by 31% year on year last year. How does that electricity, how is it generated? So again, this is at the other end of the kind of chain, if you like, in terms of where does that come from. The use of hydrocarbons dominates that. It will still be a significant component of that through the course of this long-term forecast out to 2050. If you want a short-term view, by the way, we've also got 2025 here. Well, you can see the coal really declining in terms of that electricity generation profile. That will be a significant development. And on the other end of other side of the ledger, you can see the increase in renewable power. So that's going to be the key driver in terms of electricity generation. The deployment of that is significant. And again, this does vary quite a lot by region. The driver for renewable power really right now is China. It's actually on a completely different scale in terms of deployed and near-term deployed renewable energy in terms of wind and in terms of solar. So these charts actually from a recent report from the IEA. The projection here for 2023 to 2028 for Chinese renewable electricity capacity is significantly more than the rest of the world combined. So China's deploying renewable energy at a massive scale. So when we look at China, just as an example in terms of a region, in terms of how and these regions will sit within a model. We have at MSI to provide long-term projections for energy demand and the distribution of that across different fuel types. You can see Chinese overall energy consumption is expected to plateau in the coming decade or so, and then see a moderate decline long-term. And the electricity component of that is forecast to rise significantly, and that's going to displace a large amount of hydrocarbons. But the mix between those hydrocarbons varies. So you can see, for example, gas growing over the kind of medium to longer term, with coal seeing significant decline. And again, when we look at the electricity generation component of that, so how is it going to be made, you can see the change in renewables is very significant. A lot of growth happening in China, and as I mentioned, that isn't a projection, that is happening now. So these things will change, and that will have ramifications for shipping, of course, China being the major driver for certainly commodity imports globally. Looking a little bit more locally to the Middle East, this highlights how different regions will have different profiles in the energy transition. So we look at Middle East final energy consumption. You can see the split really across primarily hydrocarbons, oil and gas. And we don't expect that to change anywhere near the same extent as we do for, say, China. It will evolve over time. We do see that electricity component rising, but we see also continued growth, and we see significant hydrocarbon usage going forward. And when it comes to the electricity generation side of things, really, I think when we look at this region, I mean, these things have been alluded to earlier, but we're talking probably about a kind of parallel kind of energy transition where we see increasing renewables, we see deployment of renewables, certainly in Saudi Arabia, for example, in terms of solar power, we're seeing major investment, major expansion, but we also see that hydrocarbon element working in parallel to support the kind of decarbonisation and wider energy transition long term. So some interesting dynamics in terms of the underlying drivers. What happens onshore drives what happens in terms of seaborne developments. And just finishing in terms of that kind of onshore, partly onshore development, when we look at the Middle East a little bit more closely in terms of the oil side of things or the hydrocarbon developments, looking at refinery capacity, for example, which shapes oil trade. In this region, we're seeing major expansion of refining capacity. And we've seen projects such as Al Zour in Kuwait, huge, Duqm in Oman, and other projects driving up capacity here in the Middle East. This chart on the left shows you deployed refining capacity east and west of Suez. So you can really see that east of Suez component driven by Middle East and Asia rising and will overtake the kind of west of Suez refining capacity. The Middle East share is shown by that red line growing. So what happens here is that for any given barrel of oil produced in the region, it's the likelihood of it being refined domestically and potentially exported as a consequence as products increases. So you're moving up the value chain in terms of the hydrocarbons that are being produced and exported from the region as well. Similarly, on the right, you can see project awards for offshore oil and gas development, the Middle East taking a large share of that in recent years as well. So it's very much a kind of parallel development in this region. So as I mentioned, these are the background fundamentals, if you like, that drive trade, cargo development. So I'll move on to that in the next section. If you want to know a bit more about what we do at MSI, we're a research consultancy. We specialize in all shipping markets. We provide reports, analysis, models, data, both of the macro, demand, supply, position and the impact of that on earnings and prices, as well as the vessel-specific valuations and forecasts. We've recently also added energy content and hydrogen market development content to our Horizon platform. I know a number of people here use this and find this valuable tool for their shipping market analysis and research. So if you'd like to know more, my details are on the slides, and my colleagues and I will be around today to discuss. Let's move on to where the rubber meets the road, if you like, in terms of the energy transition. What does that mean for cargo and trade globally? How will that develop? It's translated into developments in cargo and trade. And if we focus for a moment on the liquid market, we can see, first of all, we're showing here a variety of seaborne cargoes for liquids, chemicals, gases, and oil. we can see significant changes. Let's take a look at the overall picture, which is that it's a market that we expect to peak in the 2030s in terms of overall volumes, and that's related to the underlying trends in oil demand. But it's also one where we see the proportion of, if you like, processed cargoes increasing over time. So you can see, first of all, that the crude oil component declines significantly over the course of the forecast, but it's not a catastrophic one. It's still there even by 2050. We've still got significant cargo volumes. We think oil products will be a more robust long-term cargo, even though that will also be impacted by oil demand, partly because of the developments in refining capacity I mentioned previously, as well as petrochemical demand and other factors. And you can see the gas components and the chemicals components increasing over time. So really that kind of theme of moving up the value chain, specialization, will impact and change cargo trends over time. On the right side, you can see the kind of proportional share. So really, we're moving from, let's say, from 2000 to 2050, so a long period of time, but you can really see the drop in terms of crude oil from 70% back in 2000 down to between 30 to 40% in 2050. So significant changes are going to happen, I think. These are forecasts or projections, but the underlying themes are going, it is going to change, and dynamics will be significantly altered across the lifetime of an asset. Let's take that liquids position and overlay the dry side of things. So we've got the same kind of breakdown of liquids. Here we've shown those as kind of the blue sections of this chart, and we've overlaid dry bulk, which is red. So then, now we're looking at the complete spectrum of commodities, or pretty much the complete spectrum, certainly the major ones. And you can see again that kind of expectation that volumes will plateau through to in the 2030s, but also this major change in the makeup of cargo. So we talked a little bit about the liquid side. For dry bulk, we can see first of all that the coal volumes decline significantly. We also have decline in iron ore, and we see growth in agricultural cargoes and minor bulks. And it's actually that minor bulks component, which includes a wide range of different bulk cargoes from DRI, agri-bulks, minor ores, often used in other component parts of the energy transition for batteries and so on, minerals, fertilizers, and scrap steel, which really is growing significantly over the course of the forecast. So it's specialization in terms of cargo. I think the other theme really in terms of how the energy transition will impact cargo is diversification. We're going to see a wider range of cargoes in 10, 20 years of time, and the distribution will be more even versus the more kind of concentrated conditions in dry bulk and wet markets currently. I haven't included containers here. I mentioned they're less impacted by the energy transition. We expect container market to continue to grow through this period in terms of traffic, but obviously that's a market currently that's also being disrupted significantly, but has been under pressure from a very high order book, which isn't the case for the dry and wet sectors. Thank you. Two other factors of the energy transition: new markets. So it's not just the case that existing trades are going to change, we're going to see new markets created. Firstly, in offshore wind, this is happening. We've got long-term sharp runway in terms of growth for offshore wind capacity and the vessels needed to service that capacity. So this is going to be a new feature of the marine market. And secondly, I thought I'd mention the kind of hydrogen economy. We've talked about ammonia, been mentioned already. We're expecting cargo for that to grow very strongly over the course of the forecast, and that's already driving contracting in a new type of shipping. So these are interesting opportunities and high growth markets coming from a zero or very low position. A couple more slides just to finish on fuel and propulsion in terms of, okay, we've looked at moving the cargo, what about using it? What's shipping using in terms of fuel? I'll give you a quick idea of MSI's view, which you can see on the right side in terms of the proportion of fuel usage by the global fleet. We build this up through our models, so we're adding in new capacity, taking out old capacity, and you can see the kind of head start LNG's had. It's not going to alter in terms of proportion of fuel very much. It's going to see some short-term growth, then it's going to stabilize. We've then got methanol coming in, and further out we've got the ammonia coming in. So you can see that stage, even by mid-2030s, you're still looking at maybe 20% of the fleet on those latter two. So it's still a significant but still minority position. Further out, we see that growing and growing, and you can see on the left side the contracting by fuel type. So certainly 22, 23, we've seen significant increase in volume. In terms of number of vessels, it's been a smaller proportion because a lot of that has been large ships on containers, LNG, and so on. We are covering alternative fuels in our FMV platform, vessel valuation platform. I know a lot of people here use. You can now find those alternative fuels and run different vessels to see the projected value and earnings in MSI's FMV platform. So I think I have to wrap up there. As I say, we're around today, so if you have any questions, please don't hesitate to come and ask us. Thank you very much.